How are you thinking about this halving differently than previous halvings?
It's at a different scale. And so larger scale operators now have to really think about how to be the lowest cost operator within the industry. So actually now Hut 8 is US domiciled and based out of Miami. So a part of our a merger that just happened was I started a company and co-founded it called US Bitcoin Corp. We merged with Hut 8 Mining Corp, and we formed Hut 8 Corp based in the US, based in Miami, and re-domiciled the company. And so for us, a big part of it was bringing on a strong balance sheet. We have over 9,100 Bitcoin, around $600 million of Bitcoin on the balance sheet, really rigid operations. And really, my belief is to be a successful large-scale miner in this ecosystem, you just have to be a low-cost operator. And as long as you're a low-cost operator, when the markets run, you're able to reap the rewards and be highly profitable. And the markets compress, like post-halving, you're able to manage through the halving and consolidate.
Yeah, and it's worth talking about just that impact on the industry at large. Asher, the last time we've seen really a downturn in Bitcoin prices, we did see a washout. We saw some miners even hit bankruptcy. And now you're having a moment where the rewards are also going to be lesser, although Bitcoin is worth more. But you also see that derivative effect, how much a price of a miner's shares can drop when you see Bitcoin dropping in price as well. Do you expect a washout in the industry? Will some not make it?
Yeah, so I think the dynamics that exist today are different than what happened in 2022. And so today, for example, prices, I think, is bailing a lot of folks out, where if price remained at $30,000, $40,000 with the halving, you'll see a lot more M&A and distressed opportunities out there. Back in 2022, a big area that led to a lot of bankruptcies in the mining sector and distressed assets was because of the leverage of 2021. A lot of companies grew with debt, and that debt couldn't be serviced in 2022 when Bitcoin prices went down and energy prices went up. Where we are today is, I think, a lot of the growth that we've seen in 23 and even early 24 has been through the equity markets and a lot of folks raising capital through their ATMs and diluting. And so even though you won't see as many bankruptcies due to kind of the under leverage in terms of that ecosystem, I think you'll see M&A activity just due to an inability to get capital. Smaller scale operators won't be able to raise the capital they'll need in order to grow their businesses and to grow their operations, where I think capital will concentrate at the largest scale operators who have the lowest marginal cost of production.